countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. Start of a fresh week, Monday morning. I'm Prashant. With me, my colleague Nigel. Nigel, hi. Morning.
Hi, morning, Prashant. There was a somber end last week, with the rupee in focus. But hopefully things recover from here on. Global markets pretty okay, I think so.
There was that much-needed bounce in Wall Street on Friday.
Yes.
And I think we pick up from there. So let's take it from the top with regards to where we are set up as we begin this fresh new week, right? And I'll start with, of course, the big overarching themes, which I don't think are very different, which is, of course, AI skepticism, which is still the dominant driver for markets, is the big debate point. And actually, it's too tough a question to get answers to. I mean, the simple question is whether all the investment which is going into AI and AI, building out AI infrastructure, is there tangible return at the end of the tunnel? At what point does that end of the tunnel come? And what is the return? I mean, all those questions remain unknowable, I guess, at this stage. But it's because stocks have done so well and has gotten so extreme, there is worry. Now, apart from the return on investment questions, markets are also doubting who the winners will be, right? So think about it. So far, the clear answer, the clear sort of response used to be it's the OpenAI ecosystem, NVIDIA, OpenAI, and the other players, which the market has bid up very, very high. Last week, Google launched Gemini 3. And, immediately it topped the charts in terms of performance against ChatGPT, etc. So what that does basically is it elongates everyone else's product cycle because now they got to better this one. It means more capex, more investment, and that elusive ROI becomes even more elusive. I think it's an important point. The market has been concentrated on the OpenAI ecosystem, and suddenly you've got this Google Gemini 3, which has kind of shaken things up. So that's the other point, new thing, which I think we'll talk about as we go forward. The number two reason, AI is one. The number two reason, of course, the Fed, right? Now, I don't know why the December Fed rate cut matters so much, whether the Fed will cut or not in December. It's 50-50 at this point in time. But it seems to, right? And the Fed, of course, has been, the September jobs data is too old. We got that. And we won't get the next jobs number, which will be bunched up. We'll only get it after the December decision of the Fed. And we will have a decision by then. But in any case, I mean, I think these are two big reasons, two big factors at play at this point. Now, just to touch upon the price action on Friday, S&P was up 1%, NASDAQ bounced about 0.8%, the WIX fell about 11%. And at the margin, what helped basically were two things. One was dovish comments from Fed's Williams, which helped equities. He basically said, I fully supported the earlier rate cuts, and I think there should be more. And there was also news at the margin that the Trump administration was considering allowing NVIDIA to sell the H200 chips, semiconductor chips, to China. Remember, China has been shut out. In the conference call, Jensen Huang, the CEO of NVIDIA, did not even mention China once. But that's a market which is basically being a big booming market, has gone to zero for NVIDIA. And this, of course, at the margin helps. It's a big market for chips. Oracle was down, and I'm just talking about Oracle because, again, this is such a big AI trade. It was down 6%. For the week, it was down 11%, and it did not recover along with the rest of the market. And that kind of highlights that this question is still there, the broader AI-related concerns. The question, of course, as we head into the end of the year is simply this, right? You had a good year. Some of the sheen has been taken off in the last fortnight or so. Will investors want to take more tactical risk and go into the end of the year with some profits in one's pocket? So will they kind of go into P&L protection mode? Or, I mean, is it going to be, once again, the revival of that entire risk cycle, risk sentiment in that sense? Macro markets were quiet. 10-year yield was down 2 basis points. Oil prices 1.5%. And on oil, the new thing, of course, is that, and actually new in the sense that, well, it's come back once again. Trump is putting immense pressure on Ukraine to accept a U.S. brokered peace plan to settle the war with Russia. And a lot of it's facing humongous backlash and criticism from European countries. But Trump apparently has given a deadline to Ukraine. That is the 27th of November, later this week, to decide what they want to do. So this is another story which is important to track. The war, of course, has gone on for 3 years now. Levels, I'll just tie in support levels, nothing more at this stage. So the 20-day for both the Nifty and the Nifty Bank remain supports, as we've been highlighting for some time now. The 20-day for the Nifty is moved up to 25,844. The 20-day for the Nifty Bank is moved up to about 58,305 levels. This is as of Friday's closing level. GIFT Nifty gives you a quick sense of where we're likely to start, and we'll pick it up from there. 85 points higher is the open today. Nigel has walked across with the F&O positioning and the lay of the land there. Nigel, over to you.
Well, what spooked the markets in Friday's trading session was the kind of spike that we saw in the Indian rupee in the final hour of trade. You know, there was that fear that maybe, in fact, the RBI has stepped aside, that trade deal that we were waiting, that's got pushed back a little bit, and maybe some outflows as well. So that was a bit of a concerning factor. You'll want to see some kind of stability on the money market with regard to the Indian rupee. So hopefully that takes place today. And in fact, the hope is that we see that rate cut in RBI. Hopefully the rupee doesn't weaken too much, because that could put a bit of a jitter in terms of that rate cut as well. So that's one point. The other factor is that, yes, we were down in Friday's trading session. The India VIX did spike up more than 10%. It's a while since we saw that kind of a spike out there. But for the week itself, the Nifty actually was an outperformer. And for the month of November, the Nifty actually has been an outperform. We were making this point, so 120 points down, but the global markets did see a sharper cut. So India did outperform. One of the reasons that we did end under pressure was the FIs. They had reduced their selling, their turn mile net buyers. They sold yet again, close to around 1,800 crores odd. That was offset by the DI buying, which pumped in close to around 3,200 crores. So the institutions, they net bought close to around 1,300 crores in Friday's trading session. What did the FIs do in the F&O market in the index futures? Well, they went ahead and they added some short positioning. 2,700 contracts is what they added. 88% of their positions are on the short side. And keep in mind, tomorrow you have the monthly expiry that will play out as well. So that's the way the FIs are set up on index futures. This market is still a heavily net short market. On the option side, well, they wrote more calls. You know, in Friday's trading session, after a while, you saw call writing. 80,000 contracts were written out there. And earlier in the week, you saw a lot of put writing. There was some unwinding of those puts that were written earlier. And the PCR that had moved to around 1.5, which is towards the upper end of the range, that's cooled down to around 1. Because the call writers came back into play. 26,200 call, 26,100 call. Aggressive writing is what we saw on both those two strikes, which caused the PCR to cool down a little bit, which is not such a bad thing. Now, punching in these levels, the technical levels, as well as what the options data is suggesting, in the near term, the 20 DMA becomes very, very important. You know, if we protect that on the downside, the bulls will say, well, we have some unfinished business at higher levels. So that 20 DMA becomes crucial on the Nifty itself. The recent high at around that 26,250, that becomes the near resistance level. So that's the broad 400-point range that I'm working with. The Nifty Bank will have to lead the way. It's lost, it lost a little bit of ground in Friday's trading session, but that's still comfortably above the 20 DMA, close to around 700 points away from those levels, 600 points or thereabouts. So that's the one that will have to lead the way. But we've been making this chatter about the Nifty moving to all-time highs, the Nifty outperforming. However, the broader markets haven't participated, which is the bit of an issue. Just look at it, a clear divergence out there. The small cap index, in fact, is still down 2.5%. So 3% underperformance is what you're seeing the small cap index. You'll want the Nifty to chug along, but gradually portfolios will feel good when the small cap index and the mid cap index catches up. So we'll keep an eye out on that catch-up trade as well.
All right, no, absolutely. And the more on this as we go along, but we'll build on this. Nigel, thanks very much for that. Now, U.S. markets ended higher on Friday, as we told you, after, Federal Reserve, the New York Federal Reserve President, John Williams, suggested one more rate cut this year. Listen in to what the market experts believe the Fed will do in December policy.
I've always said the Fed cares about the credit markets. They don't care about the equity markets directly. And I think the real issue here that so many people have been talking about is, will there be a divisive vote? Will we have 3 governors vote against Powell, or will the bankers argue the opposite? I think that's the real issue, to see what comes out of this meeting. And I think it's very important, Becky, to realize there's nothing new about this. 4 of the governors voted against Paul Volcker at one point at the instruction of President Reagan, who wanted lower interest rates. Volcker resisted. He nearly quit his job because of that.
What's causing the tremors under the market? And to me, I think the answer is, and I think the real thing is the Fed. And the levered part of the markets and the tightened liquidity in those areas, it seems very clear that the Fed's cutting stance, when it went below 50%, really accelerated to the downside. And that's because the levered parts of the market that are illiquid were raising cash where they needed to raise. So you saw crypto lead to the downside. The deleveraging was happening in crypto. Investors sold what they needed to do to cover that. And I think what the market is saying, that the market now needs a third cut for this year.
It nets out as uncertain. It nets out as whatever the outcome is going to be controversial, it's going to be messy, and it will reflect a divided Fed. The market is all over the place on this, Mike. As you know, in the last 3 weeks alone, the implied probability of a December cut went from the 90% to the 30%, and now to the 60s. Those are massive moves for a meeting that is on December 10th. So it reflects what you said, and this is why it's going to remain uncertain. The data isn't going to resolve this, especially as we heard that we won't get the October CPI inflation report.
Okay, well, as I said, I don't know why that December meeting is so important, but yeah, I mean, I think no data, that basically is the point, and the decision is split 50-50 about a cut, no cut. We'll see. Well, I want to welcome in Surabhi as well, who's now in the studios. Surabhi, morning.
Hi. Morning, folks. Sorry for the delay, bit of a hiccup getting into work this morning.
Yeah.
But anyhow, I think the world's feeling slightly better because the hope is that after that, that commentary that we had from the New York Fed president, that indeed that rate cut will be delivered like a December goodie around the middle of the month. And that's showing up in a lot of the Asian markets which are trading. Japan's shut. The ones that are trading are positive. Let's quickly pull up the implied open, the GIFT Nifty, and what that is suggesting, whether indeed our market will keep marching on smartly above the 26,000 mark. And yes, indeed, that's the indication right now. So let's see. For the time being, let's bring in Ed Yardeni, president of Yardeni Research, into the conversation. He's our first guest on the show. Mr. Yardeni, thanks very much for joining in. Always a pleasure having you on. So which camp are you in? Will 25 basis points get delivered in December?
I don't think so. I think the economic data is going to show that real GDP is coming in at something like 4% in the third quarter. The fourth quarter is going to be somewhat confusing with the government shutdown. But I think we're going to see the PPI this week come in a little bit on the hot side because I think tariffs continue to put some upward pressure on durable goods inflation. And I kind of stick with what Powell said at his press conference only a few weeks ago, and that was that a rate cut in December is not inevitable. And he was kind of frustrated. He said, we've already done 150 basis points cut in the past year. Maybe it's time to just kind of pause again and see how things unfold. So I think that it's not inevitable that there's going to be a rate cut, even though the president of the Federal Reserve Bank of New York made it sound as though maybe things were changing at the top levels of the Fed.
All right. Hi, Ed. Good morning. Good to see you. And Ed, a quick question with regard to the cryptocurrency market. That's falling apart. Do you see any kind of contagion to the equity markets? Point number one. And the second factor is, you're clearly clear with regard to your stance on the Fed. But with the yen weakening, there is a growing concern that Japan may go ahead and raise rates. The yen carry trade then could face some disruption, and that could spill away into global equities. Do you think that's a risk?
Well, to start with your last question, I think that we've already, about a year ago, we had a stress test of the yen trade. These things can be cleaned up pretty quickly. Mm-hmm. And I think yen traders have recognized that it's a volatile situation right now. They can't count on rates to be low in Japan. And they can't really predict where the currency is going to go. For now, it looks like it's going to go down. I do think that much of the weakness in the stock market this week related to the free fall in the crypto market, particularly in Bitcoin. A lot of people miss this, but back in July, the United States Congress and the president enacted a act called the Genius Act. And the Genius Act basically established stablecoin, dollar-based stablecoins that'll be backed by treasury bills. And that means Bitcoin really doesn't have a purpose as a transaction media, not that it ever was because it's so volatile. So that leaves it as a store of value, and that hasn't been so so predictable. A couple of years ago, Bitcoin had a real fall, but then Wall Street and the Trump administration came in and took some actions that boosted the Bitcoin. I don't think they're going to do that again this time, or they've already done it. Let's put it that way. So I think Bitcoin is going to remain weak, but I think the Nasdaq increasingly is going to diverge from Bitcoin. They had been tracking each other very closely, but I don't think that continues.
Yeah. I mean, on a spectrum, I guess, Ed, right? There's technology, there's unprofitable technology, there is new age stuff, unproven stuff, and then there is Bitcoin, crypto, right? So in a way, it's the most speculative part of the spectrum. And it kind of just, maybe there's a sentiment, I mean, in terms of signaling effect, it's a sentiment indicator that maybe I don't know if there's anything beyond that in terms of crypto, as you say, right?
Well,
in terms of signaling value.
Yeah, look, and at the beginning of the month, I did think that there might be a pullback in the market because the bull-bear ratio that I follow was extremely high. So I concluded there's too many bulls and we need some correcting in the sentiment, and that seems to be playing out quite well. In addition to that, as you mentioned, it's not just crypto. We also have everybody kind of conceding that we really don't know what's going on with the accounting for earnings by these companies that buy these NVIDIA GPU chips. We don't know how long the GPU chips can be used. There's some talk that, after 1 to 2 to 3 years, they're no good anymore. You might as well throw them out. And there's others saying, no, they'll be good for 5 to 6 years so they can be depreciated over that period of time. I think this has just become, let's be honest, this is a known unknown. Nobody really knows. And as a result of that, some of the excitement and froth in the AI trade has come out, and it may stay out for a little while.
And the new thing was Google's Gemini 3 last week, right? And that's the other thing, right? Everyone just assumed that OpenAI and everyone around it is basically going to win this thing, this AI thing. And now suddenly you've got Google Gemini, which basically is topping performance charts against ChatGPT, etc. And now it kind of throws everything into a tailspin once again. So one is not sure anymore who the winner is. So there's that aspect of this as well.
Absolutely. As a matter of fact, I was using ChatGPT. I was using the Copilot version that Microsoft has. And then a couple of days ago, I switched over to Gemini 3 for some more in-depth research. I'm using them all. And I'm using AI all day as a research tool. So I think that the winners are going to be the cloud providers. They are expanding their capacity as fast as they can because the demand for that capacity continues to increase. So I think if you have a diversified portfolio of AI stocks, you'll probably do all right. But I think they're due for a bit of a pause here, and I wouldn't be surprised if the market broadens out from the Magnificent Seven, which includes most of the hyperscalers, the big AI stocks. I think it can broaden out to what I call the impressive 493.
Yeah, no, absolutely. By the way, are you paying for Gemini or using the free one?
No, at this point, I'm not. I think it's kind of on a trial basis.
Okay.
And by the time I think about paying for it, maybe somebody will come out with an even better model.
There's a new Chinese one called Kimi. KIMI, I mean, which is also apparently there's all these things.
Like I said, I think the LLM, the companies that sell the large language models are not going to be the ones that make the money. It'll be simply the cloud providers.
Yeah. Thanks very much, Ed. Great speaking with you. Thank you very much for joining us. Really a pleasure having you with us here on CNBC-TV18. Well, let me just quickly run you through the interactions which are lined up here on the program. 8:35, you had the management of Jupiter live to discuss their outlook for the second half of the financial year. That's a hospital company. 9 o'clock, we have Incred Capital's Pramod Athe to discuss the ABS and ABS norms, especially for the auto sector. We'll do a quick check in terms of whether the GST-led demand boost is enduring. 9:20, we have First Global's Devina Mehra, who talks markets with us. 9:35, KEI Industries breaks down the demand momentum and outlook for the second half. The management of Chola Finance is back with us at 9:45. Impact of renewal certificate rate revision and their business outlook there. And towards the end of the program, Lata in conversation on loan growth, margins, stress in the NBFC sector with Krishnan Sitharaman of CRISIL and Jairam Sridharan of Piramal Finance. Piramal Finance as a company, as a stock, has done phenomenally once it's listed separately as well. Nigel.
Time to slip into a quick break. We've got a lot of stock-specific action to track for you on the other side. For the time being, I give you a sneak peek into that list. We're looking at Tata Chemicals, HG Infra, Kalpataru Projects. You have SBI Card as well. All of them will be reacting to positive news flow. On the flip side, Swiggy, Eternal, TCS, Lupin, Shilpa Medicare, as well as Natco Pharma will be reacting to negative news flow.
Welcome back. Well, the cues across Asia this morning are fairly optimistic, as is what we saw on Wall Street as well on Friday, because the market is hoping that the Fed will deliver that 25 basis points rate cut, and maybe some of that AI wobble is behind us. At least no signs of that right now as the week opens up. And because of this mood and sentiment, the implied open is also looking very buoyant, almost 80 points higher. Last time we checked the GIFT Nifty, and that implied open, still around 82 points up. So let's see if the Nifty today can decisively take out what has been a resistance up until now, this whole zone of 26,100 to 150. That's the watch point. Plenty of interesting news flow over the weekend, lots of stocks to watch as well. So let's straight away get to it with our list of top stocks this Monday morning. Our team is standing by. Guys, morning to all of you. There were, the labor codes, 4 labor codes finally got implemented, and it's a new era in terms of labor laws in India. But Mangalam, what impact could this have on the gig economy? So Zomato and Swiggy in focus?
That's correct. So the government had announced 4 new labor codes which go into implementation from November 21, 2025. And in that, for the first time ever, gig and social workers have officially been recognized under the Social Security for the first time. What this means is that platforms must contribute about 1 to 2% of their annual turnover, which is capped at 5% of gig worker payouts for Social Security. And this benefit should be rolled out via state welfare boards and government schemes itself. What does this mean for Eternal and Swiggy? Now, Eternal and Swiggy already provide health insurance to their riders, which amounts to about 0.7 to 1% of their overall sales. If this mandate provides for 2% of sales, the incremental hit could be about 150 to 200 crore on their gross merchandise value. This could mean a 1 to 2 rupee increase per order, which have to be passed on to the consumer. The companies want to stay EBITDA neutral out here. What is it that the companies say? They welcome the government proposal on gig worker safety, but they will await final notification before assessing any materiality out here. But the short point is it could be a hit anywhere between 150 to 200 crore on these companies. So to that extent, we may see a bit of a dip.
Okay, all right. Mangalam, thanks a lot for that. Hopping across to Rima, who's back from Japan. Good to have you back, Rima. Tell us about TCS.
Hi, good morning. Good to be back. So on TCS, there is a legal setback. So one, the US Court of Appeals has upheld that the company TCS has to pay damages worth $194 million. This case dates back to 2019, where a company called CSC, which is now a part of DXC, said that an employee, they were working on a partnership, and an employee moved over to TCS, and they used CSC's proprietary software to help TCS build out their own insurance platform and software. So basically, it's called misappropriating trade secrets. So this case goes back for more than 5-6 years now. So TCS has to pay $194 million of damages. But the good part is, in that earlier judgment, it also said that TCS cannot use there was an injunction against the company TCS using part of the trade secrets, which there was a contention about. At least that has now been vacated, which means TCS can use the software, but it's not a closed case because it's gone back for reassessment. So at least there is some wriggle room over here, but $194 million of damages, the company has said that they will be appealing this vigorously to defend their position. Back to you.
Thanks very much. And I'm not sure, Rima, when you say good to be back, you're happy to be back.
Missed us, all of us.
Smiling. But more on that later. What is that, Rima? Sorry, the audio was not on.
I said, I've got kids back home. Yes, I'm happy to be back.
All right. Okay. So that's Rima back from Japan, not from Japan, but back from Japan. Well, Tata Chemicals is the next one we want to focus on. Sonal is here with details on this one. Sonal, morning.
Good morning, Prashant. Well, a couple of capacity expansion plans announced by Tata Chemicals. One of them is their major Mithapur capacity itself. They will be expanding their soda ash capacity by 350 kilotons per annum and investing 135 crore rupees for this one. It will be added in the next 24 months, and the company is doing it because they're seeing increasing applications in sustainability formats, something like battery chemicals, etc. Something that the company had spoken about in Q2 numbers as well, but they had indicated soda ash demand otherwise is quite low. They have a current soda ash capacity utilization of 90%, so they want to add more capacity here. Precipitate silica as well, 50 kilotons per annum is what they'll be adding with an investment of 75 crore rupees. Period in which it will be added in next 27 months. They'll be funding it via internal accruals and other options. And the rationale is growing demand in rubber and tire industry, and the capacity utilization that they have here is around 86%. So this stock will be on our radar.
Okay, so we will keep Tata Chemicals on the radar. Thank you for that, Sonal. Let's go across to Gaurav, who's watching out for all the spending patterns and trends with SBI Card. This is just after the big, bumper festive season. Gaurav, how did SBI Card fare?
Well, as if you look at SBI Card, it actually performed more or less in line with the industry, because if you look at the industry level, the overall spends that declined almost by 1.1%, while SBI Card, we saw a decline of around 1.5% on a month-on-month basis. But on a year-on-year basis, these numbers actually look good. SBI Cards actually increased almost by 25% in terms of overall spends. Now, coming to the cards in force, if you look at number of cards, there also we saw a steady increase both in terms of industry as well as SBI Cards at around 0.6%. But a key thing to highlight is that SBI Cards now gained around 26% of the incremental market share in the last 12 months. So that is something which is positive. Other than that, in terms of value, if you look at the spends, SBI Cards, they have gained almost around 65% of the incremental share in the last 12 months. So that is also something which is positive for the company. And lastly, in terms of the overall volume, it increased almost by 6% on a month-on-month basis for SBI Card. It was a bit better than the industry, which stood at around 4.7%. And overall average transaction, that number also came in a bit better at around 5% for SBI Cards versus overall 4% for the industry. So definitely a bit better performance from SBI Cards, at least in this month, for the October update that we have seen so far.
Okay, all right, Gaurav, thanks a lot for that. And I recall we had a chat with Shweta Filara, who had upgraded the stock after a very, very long time. So SBI Cards in focus. But let's get our daily dose of pharma. Ekta joins in to help us out with news flow on Lupin, Shilpa Medicare, as well as Natco. Ekta?
Morning. Well, not looking too good for all three of these stocks. So Lupin, there was a US FDA inspection in their Goa facility. They were issued 7 observations. The inspection ended on the 21st of November. Shilpa Medicare, the US FDA inspected their Unit 4 at their Jadchelda facility, and they were issued around 8 observations, but they've indicated that there were no repeat observations. So maybe that should be a positive. And lastly, we had Natco, where the US FDA inspected their API manufacturing facility, which is located in Chennai, and they were issued 7 observations by the US FDA. Obviously, the detail lies, the devil lies in the details when it comes to these observations and how difficult it might be to solve. But the number of observations will probably weigh on each of these stocks.
All right. Ita, thank you very much for that. Now, HG Infra, Kalpataru projects are the other ones we want to address. Vivek has got this covered. Vivek, morning.
Well, good morning. That's right. So, HG Infra, Kalpataru, they formed a JV. It's a 40-60 JV where HG Infra owns 40% and Kalpataru owns the rest. So, this particular JV has been declared as L1 or the lowest bidder. This is for a Maharashtra-based metro project, the Thane Integral Ring Metro project. The EPC bid for this particular project was at 1,415 crore rupees, and the time period for construction is close to 36 months. So, now what is the scope of the work? The design as well as construction of an elevated metro viaduct. HG Infra, remember, order book at the end of Q2 was in almost 14,000 crore, and Kalpataru project's order book was in excess of 64,000 crore. A positive development for both of these names.
Okay, all right, Vivek, got it. Thanks very much. So let's quickly recap our list of top stocks to watch this morning. The ones that have positive news flow around them are Tata Chemicals, HG Infra, Kalpataru Projects, and SBI Card. Stocks with negative news flow around them: Swiggy, Eternal, TCS, Lupin, Shilpa Medicare, and Natco Pharma. So that's our top 10 list on the equity side. Now let's focus our attention to the commodity markets. Manisha is joining in with the latest. Manisha, good morning. New week, new start, and the markets are hopeful of a Fed rate cut. So how are commodities digesting it?
Still looking at it, but you're right. Yes, from a nearly 40% of a probability of a rate cut to almost 70% today clearly is a change there. And we have seen the dollar index move certainly in the positive side. It's a 6-month high, 100 is holding, and the fiscal strains in Europe also is one of the reasons that you have seen euro and pound decline, and in turn the dollar is getting support because of that as well. Having said that, this is exactly the reason that you also have seen some pressure coming in the strength in US dollar index. That is, take a look at the gold and silver prices. We've seen a decline come in there. Remember, we also are dealing with the strong US labor data, soft US yields, dovish central bank signals, and that has led to a decline in silver prices below $50 an ounce. Markets also are looking at copper prices trading at around 2-week lows right now. There are signs of soft demand from China, and that seems to be weighing in. A quick word on the crude oil prices then, and we're trading at a 1-month lows onto this one. It has been a 3% decline for crude prices for the month of November right now.
Okay, all right, Manisha, thanks a lot for that. For the time being, we slip into a short break. Up next, we have Dharmesh Kant, Head of Research at Chola Securities, who joins us for some fundamental stock talk. Welcome back. As promised, Dharmesh Kant, Head of Research at Chola Securities, joins us on the show. Hi, Dharmesh. Good morning. Good to see you in. Hope you had a good weekend. Dharmesh, I wanted to ask you about these new labor codes that will be introduced from November 2025. It could have a marginal impact on various companies. Mangalam just told us maybe a sentiment hit on stocks like Eternal as well as on Swiggy. These stocks have corrected a fair deal actually for various reasons from the recent peak. What's the view on both these two names?
Yeah, good morning, Nigel. Thanks for having me for the show. Even after the correction, look at the valuations where they are trading and the path to profitability. It's still wide open to justify the current valuation multiple which they are. So be it Eternal or Swiggy, Eternal is trading above almost 3 lakh crore market cap. So this may be a slight dampener and a marginal hit, but the way the cash burns is happening in the entire sector, I don't see next 2 years or 3 years where good profitability can come through. And eventually, if the global margins you look at, I imagine it does about 4 to 5% kind of a margin for the same sort of a business, that too in US. So in India, it can be at best be 2.5% kind of a margin. So to that extent, the stock prices can range bound. It may nudge around, say, 10-15% plus minus, but I don't see this two stocks being a wealth creator for next 3 or 4 years.
Dharmesh, hi. Good morning. Good to have you in. SBI Card. Our colleague Gaurav was just telling us that October trends have been fairly decent. And year on year, of course, there's a big pickup, but not too bad month on month either. How do you find the stock, the valuations, and would it make the cut for you?
Yeah, good morning, Survi. Valuations are on the higher side, and it has been the case for SBI Cards for quite long. The only problem is the asset quality, which is still, the deterioration is above 9.5% kind of NPA problem is there. So that is the gray area for SBI Card, though this month has been good. And so has been the case with most of the, lending space. So October particularly was better in light of the GST cut and the enhanced buying, which has happened and the pent-up buying put together. So real test will come through in the month of November and December, and let's see how this entire space pans out on the microfinance and the credit card business when it comes to the asset quality front. That is still a bit of a gray area to be negotiated on. Having said that, trading rallies based on this news flow can still be there for a couple of days. And the market, to my mind, is likely to be more of a trading market from here till, say, next couple of months with budget being lined out and maybe US tariff comes through. So this will keep the bottom line in place and maybe a new high before the year end.
Okay, all right. Dharmesh, a couple of other quick questions. Then we have a lot of news in terms of pharma stocks as well. Lupin, that's the one that could be top of mind. Any view on this one? And from pharma, what do you like?
Yeah, Nigel, Lupin came out with a very strong set of numbers last quarter, and it was followed up with a good set of numbers in Q1 as well. So no, complaints out there. The numbers continues to be steady state and the growth trajectory in excess of 40%. So it may, come down to say 25-30% kind of growth trajectory. And these companies, pharma companies, are also aided by the depreciation in the currency which is happening. So that will keep the bottom line in place and the margins swelling up going forward because of just the INR benefit of the depreciation they are going to get. Fundamentally, if you look at all these pharma companies, incremental news flow here and there keeps on coming, and that's the nature of the business. One has to deal with that. But from a long-term perspective, I think Lupin, Zydus Lifesciences, Torrent Pharma, these all are value placed, and Lupin being cheaper of the lot compared to say a Sun Pharma or a Cipla. I think 15-20% kind of an upside traction by the time they give out their Q3 earnings is likely on the card. So any declines out there in this space should be bought into. Pharma as a space is looking very attractive, but again, the topic remains to be there is Lupin, Zydus Lifesciences, and Torrent Pharma.
Okay. All right. Stay on, Dharmesh. We'll have more questions for you in just a bit. But let's also get our first corporate conversation of the morning going. Ankit Thakkar, CEO at Jupiter Lifeline Hospitals, is with us now to talk about some of the trends that they've seen in the second quarter and the outlook ahead. Good to have you with us. And, if I look at the basic numbers, it seems to be a fairly steady quarter for you. There is a 17% revenue growth. Margin is at around 23.4%. But Ankit, let's start by understanding what is leading to this RPOB growth. 16% growth, and your RPOB, average revenue per occupied bed, now stands at just almost, just under 65,000. So just tell us, is it a better mix, or have you managed to take any price increases? And what's the outlook on this metric for the second half?
Good morning. So on the RPOB front, we predominantly have a mix to credit for this quarter. Indore is continuing its growth journey, and because of which it is getting into more and more complex medical services, which contributes to the RPOB growth. This is on expected lines, as we have spoken about in the past as well. And then this year also we saw slightly lower medical infections, which typically happen in Q2, which led to higher percentage of surgical cases for the quarter, which also reflect for a higher RPOB.
So where do you see the RPOB by the time the year ends, FY26 end? Can you aim at, say, a 70,000 kind of a mark?
So honestly, RPOB is not a number or a lever which we try to manipulate actively. It is just a reflection of the kind of patients who walk in through our doors. And it is not something that we actively control. Having said that, we don't really expect very turbulent RPOB movements. Broadly speaking, they should grow in line with inflation.
Okay. All right. Hi, Ankit. Good morning. Good to see you, Ben. I wanted to ask you about, there were some cashless payment differences between hospitals and insurance companies. Have you all experienced anything on this front? And if you could tell us, what is the recent update?
So currently, we don't see a lot of friction as far as we are concerned. And I have maintained multiple times that I see insurance providers and healthcare providers' relationship in the long term as a symbiotic relation. Both the industries have to necessarily grow hand in hand. So in the long term, it's a relationship of partnership. However, because in the short term, there is a little bit of a buyer-seller kind of arrangement. So from time to time, those kind of frictions may happen. But we are not seeing anything which can derail activities for either of us.
So you're continuing with the cashless facility, right?
Absolutely.
Okay, Ankit, we'll leave it there. Thank you very much for joining us. Good speaking with you. Appreciate your time here on CNBC-TV18. Good luck as you continue to execute. We'll take a quick commercial break here. We're going to come back in just a bit from now. We'll connect with Sudarshan Sukhani and Mitesh Thakkar on some technical trading ideas. We'll also bring in Karan Torani on this entire sort of new labor laws, and the implications for platform companies like Swiggy, Eternal, etc. Coming up. Welcome back. You're with us here at Bazaar Morning Call. Well, as Royal Enfield celebrates its 125 years, the company CEO takes a ride with CNBC-TV18's Parikshit Luthra on the streets of Goa to take us through the experience of their motorcycles. Take a look.
We'll just go for a spin and then we'll come back and start talking about it.
I think great idea. I'll choose the cruiser. Let's get ready. Let's put our jackets on. We'll take a quick spin and come back.
Come.
All right, let's
Can't
start.
Stop.
Well, some nice visuals coming in there. Now, the CEO told Parikshit that they will continue to focus on middleweight motorcycles and also took Parikshit through the journey over the years. Interesting stuff. Listen in.
Go with 125th year of Royal Enfield. You're entering into your 125th year. Could you give us a sense of the vision going forward?
See, Royal Enfield is the oldest motorcycle brand in continuous production for the past 125 years. Very few brands can actually climb. Over this 125 years, this brand has gone through a lot of challenges, some seminal moments, but yet it withstood all the storm and became very successful. Primarily, we started making motorcycles in the middleweight segment. That's what the focus is. As an organization, we had a choice at a point of time what sort of a motorcycle we have to make. We took a decision and we said that less is more. We won't do too many things. We will focus on middleweight, and continuously we have been doing it. So at a point of time, we were making 4,000 motorcycles per month. Currently, we make almost 4,000 motorcycles per day. And last year, we crossed about 1 million motorcycles. So that has been a success story for Royal Enfield. What is that? It's built based on what? It's built based on our understanding with the community and ride with the community. We are riders, myself, Siddharth, we all ride, and our top management ride. So we ride with the community, learn from them, come back, go to the drawing board, design the motorcycles, make the motorcycles, ride, test it, take it back to the community. That's what it is. In fact, the Motoverse is our annual motorcycling festival. We do every year. In fact, this year we had, if I'm right, about 35,000 plus footfall. And this is a place where we celebrate motorcycles, customs, art, music. That's why every year we make it bigger, better. So that's the Royal Enfield as a DNA. From here, what do we see? We do see the motorcycling culture, which is getting built, and we are an evangelist in a way. We want the motorcycling culture to spread across the globe. In India, in fact, we have been very successful, and we hold a market share of almost about 89% in the middleweight. Outside India, we are holding a market share of almost 9% in the middleweight, but still we see there's a huge scope for us to create one more success story, what we have created in India.
Well, that was a rare and exclusive chat with Enfield's CEO. But stay tuned for more excerpts of this interesting chat all through the day on CNBC-TV18. Hoping they come out with a bigger bike as well. 650cc is good.
We have a proud owner, a happy customer, I think. Looking to upgrade.
I have only ridden the Royal Enfield all my life. The 350cc, the 500cc, the 525 Lightning as well did come in limited edition. And today I ride the 650 Interceptor. That's my preference for the bike. No comments on the stock, but I'm a loyalist, and I've tried the other brands out there, 650cc. Miles ahead.
No, I think we have to hold back Nigel. He might go riding on the bike right now otherwise.
I will say something. As avid rider, Nigel,
yeah.
ये आपकी responsibility बनती है कि आप सड़कें भी ठीक कराएं. Especially Mumbai की. Campaign चलाएं.
No.
I mean, but these bikes you ride out, right? On highways. And
I don't ride too much very far right now, but I've done long rides. And you talk about bad roads, Prashant. Just a quick word on that. You take that right turn from Nipani. The roads were terrible to ride a Royal Enfield to Goa. But on the Royal Enfield, it just feels so good, I've left on a Friday night and reached on Saturday morning, beautiful, and come back to work on Monday morning.
Forget it. I've done the night one.
Oh, my God, 2
Back
riders.
in the day. But anyway, well, Hormuz is now joining us with the big movers on Friday, which saw some of the heavy volumes. What's behind the price action? Hormuz, tell us more.
Morning, Prashant. There's a public transport user speaking to 2 bike riders as of now, but shrimp feed stocks are continuing to move higher all through last week. Avanti Feeds was one. Apex Frozen's turn on Friday and snapped a 2-day losing streak. Friday's volumes were the highest on record. Over 1.5 crore shares have been traded on that stock on Friday, but out of those 1.5 crore, only 12.5 lakh shares were marked for delivery, and compared to the 20-day average of just over 1 lakh. And the stock has done well in the last 1 month. It's up 33%, and as a result of which it has also turned positive on a year-to-date basis. VLS Finance is a small cap stock, is a market cap of less than 1,000 crore. It's gained in 6 out of the last 7 sessions, but ever since it made that buyback announcement last week, the volumes have been on a downtrend every single day. And from around 8 lakh shares that were traded on last Monday during the buyback announcement, last Friday saw only 90,000 shares traded. That was even below the 20-day average. And the delivery volumes were also lesser than the 20-day average. Stock is in the stage 1 of the ASM framework as well. So VLS Finance is one. And lastly, DCM Shriram has snapped a 4-day losing streak on Friday, and it's a very interesting trend here. One single day every month over the last 3 months, the stock has had outsized moves and outsized volumes. Now on Friday, the stock was up 8%, over 30 lakh shares traded. On the 29th of October too, the stock was up 8% with over 32 lakh shares traded. On the 17th of September, the stock was up 12% with over 40 lakh shares traded. The last 2 of them, barring the October move, which was in reaction to the earnings, the other 2 moves don't have a specific reaction to it. Even on Friday, or 30 lakh shares traded, 20-day average of 2.2 lakh. But out of those 31.5 lakh shares traded, only 1 lakh shares were marked for delivery. That was also around about the 20-day average of around 35,000 shares. So some outsized moves on DCM Shriram, but delivery volumes being significantly lesser.
Okay, interesting stats there, Hormuz, and we'll keep some of these stocks on the radar as well. With that, let's head across to Sudarshan. He's been going through all the brokerage notes of the morning. Let's see what he found most interesting. Morning, sir.
Morning, Surbi. So first one is Shelley Engineering. UBS has initiated coverage with a buy call and target is 4,000 rupees per share, almost 50% upside from current levels. And it says it's one of the few companies with patented technology for fixed dose and auto-injector pens, and also it's ready for the launch of generic GLP-1. Even the India-US trade deal, if it happens, it could be one of the biggest beneficiaries, and it's in the process of gaining one large customer in consumer electronics and semiconductor. UBS forecast a 75% EPS CAGR over FY 25-28. Ambit has written on NBFCs, especially auto NBFCs, and the biggest positive has come for Shriram Finance, where it has upgraded the stock to buy, and target is as high as rupees 945 per share. It says auto NBFCs slippages had risen up to 104% FY25, but it sees asset quality cycle improving for these NBFCs over next 6 to 9 months. And that can be led by, first, increasing truck operator margin, second, reducing excess transport capacity. Also, it has reduced credit cost estimates by 14 to 50 basis points for Chola and Shriram Finance, and it expects EPS CAGR in the range of 20 to 28% over FY 26-28. And also, it has upgraded earnings estimates for both Chola and Shriram Finance by 5 to 6% and 10 to 11% respectively.
Okay, all right, so thanks very much. So we will keep some of these names, NBFCs as well as Shelley Engineering, on the radar today. Take a break. On that note, on the other side, we'll of course track the pre-opening maneuvers that the market is making, and also we'll have with us Incred Capital's Pramod Amte. We'll discuss the demand outlook for the auto sector. Welcome back. About 17 minutes to go before the day's action starts off. Let's actually turn the spotlight on HEL, because what we are dealing with is a set of very, very unfortunate, tragic circumstances. And the stock is going to be in focus on the back of that. I think we have Sudarshan joining in. Sudarshan, we all saw those absolutely heartbreaking visuals that came in on Friday evening. And obviously, I mean, it's an aircraft that has been manufactured by HEL. But tell us more about it.
Not a good day to talk about HL stock, but unfortunately we'll have to. It's our job. It was a tragic incident in Dubai Air Show involving HAL, or say Hindustan Aeronautics Light Combat Aircraft Tejas. And in that incident, Wing Commander Nimansh Sayal, who was the pilot, and he got killed. It's the second incident of Tejas aircraft in the last 20 months. The last one was in March this year in Rajasthan, Jaisalmer. After HL has issued statement, but Elara has today come out with a note on HL. It maintains buy call with a target of 5,680 per share. It says fighter aircraft crashes are common globally, even in the last few years. We have seen aircraft of US and China, which are a better, more advanced version of Tejas aircraft. They also were involved in crashes. So it's very common. And it believes that HL remains the key player in aircraft manufacturing in India and likely to remain a beneficiary of burgeoning order pipeline. It does not see any major financial impact because of this crash, but Tejas Mk1 exports may be delayed despite stable domestic orders, but it maintains buy call.
Okay, all right. Sudarshan, thanks a lot for joining in and giving us that piece of news. We'll track the HL stock, but prayers and condolences to the pilot, who lost his life, and the family out there as well. Strength to them in this very, very difficult time. Above all, we lost one of our pilots. Well, time to move on then and talk about the markets. Sudarshan Sukhani of Technical Trends and Mitesh Thakkar of Bonanza Portfolio join us on the show. Hi, Sudarshan. Good morning. Good to see you in. Good morning, Mitesh, as well. Mitesh, you go first. Friday's action, if you're an optimist, you'll say India outperformed the globe. If you're someone who's a little bit bearish, you'll say, hey, we ended at the low point of the day. The rupee weakness is something that hurts sentiment as well. So maybe those all-time highs will have to wait. Which camp are you and what's the trade, Mitesh? For starters, the gift would be suggesting a positive start.
Good morning, Najib. So I think, two things. Both of what you said is correct. We did better than the rest of the world. And also is the fact that we kind of retraced from the earlier highs or the historical highs, all-time highs. So I think that's a very natural reaction when any index or a stock price reaches its all-time highs, which was established a couple of years back. I think you will see some profit booking from a psychological point of view. I think that's a process which the Nifty might also undergo. So therefore, I think, till now, the index gets past 26,280, 300. I think be patient. You will get those declines to enter. And on the downsides, the bigger supports I've always maintained are closer to about 25,900, 800 zone. So once you get close to them, that will be the time to, possibly be aggressive on the buying side. But for the time being, try to be moderate and trade with stock-specific biases.
Okay, all right, Mitesh, got that. Let's go to Sudarshan as well. Sudarshan, good morning. So what should the approach be? Because the market, every time we've approached this zone of 26,100, the bulls have gotten stalled in the past. So how do you approach things today?
Yeah, good morning. You're right. Every time we approach that level, something happens and we are not decisively crossing it. Look at it the other way around. The other way is that level is so significant. Whenever we cross it, as I've explained last week also, the markets will go up like a rocket. So we'll have to anticipate that crossing and wait patiently. We are not intraday traders because intraday trading doesn't make money. You have to be patient. The patience is go with the trend. The trend is up. These 1 day, 2 day moves on the downside are going to come again and again. They are corrections, they are pullbacks, they are inevitable. We should simply suffer through them. So my view is the trend is up, either be long or go long and keep a tight stop somewhere around 25,800.
Okay, fair enough. So 25,800 is the stop that Sudarshan is telling us to keep in mind. Let's also talk stocks, gentlemen, now. Mitesh, morning. What's your list looking like today?
Good morning. I have a mix of buys and sells despite the fact that the GIFT Nifty is slightly on the positive side. I have 2 buys and 2 sells. On the buying side is Max Health with a stop at 1160, a recommended buy for targets of 1220 in the short term. And Siemens, which has given a good pullback over the last 3-4 days, is now close to its support areas of moving averages. So buy with a stop at 3144. Look for targets of 32.35. On the selling side is HFCL with a stop at 73.5 for targets of 66. And on a mild pullback, BEL, looks like a stock which could possibly go through some profit booklet correction. So try to sell in the range of 419, 420. Keep a stop at 426 and look for targets of 407.
Gentlemen, morning. Sudarshan, what about you?
Well, I have 3 buys and 1 sell. I'll start with the sell. It's BSoft, Birlasoft, which is an intraday short with a stop above 390. Then NTPC is a buy with a stop under 320. Blue Star is a buying opportunity with a stop under 1750. And Tata Consumers is a buy with a stop under 1160.
Okay, those are specific trading ideas. But the rupee is opening up at the bottom of the screen. And there was, I think there was a news flash on the wires that maybe the RBI has intervened, and we'll try and sort of find the exact bid. RBI likely intervenes to prop up rupee ahead of local spot market open. That's according to traders, but that's a wire report which is coming through, and it's a bit of a move the other way. It was a massive move in the last 60 minutes. Last 45 minutes actually started at about 2:45 and then went on all the way into closing. And very few, it took out the 88.90 type, 88.80 type of levels. Very few trades all the way to where it went. So basically just a frenzied short covering move, which took it to new all-time lows, the rupee that is. And of course, the dollar appreciating against the rupee. So that's the picture. We have Pramod Amte, Head of Institutional Equity Research at Incred Capital now joining us. And Pramod, good to have you with us here. Thanks very much for joining us. And we're talking about the autos as a space, Pramod. Just give us the overall view first up on where you stand, because stocks have done well pre the GST cut, after the GST cut. What's your view on your list of stocks under coverage?
So clearly, in terms of sector, we continue to remain overweight. Couple of macro trends which have turned substantially favorable, which will play out. One, there is large stimulus for consumer demand, almost to an extent of rupees 5 trillion spread across income tax cut, interest rates, pay commission, and the GST, which is huge, which we feel will continue to play out for next 2 years plus. Historically, if you look at when such steep cuts on prices have happened, the CAGRs on the 2-year basis on the demand side has been double digit, even though the managements have been cautious to come out and guide post the festival momentum. But we feel it will sustain and it will surprise on the positive. The best cases to look at is, in spite of such tough situations like COVID or in terms of financial crisis, when interventions happen, the consumer has surprised on the auto demand. So looking at the Nifty valuation for auto sector, which is near the 10-year mean level, we clearly see a comfort and continue to remain overweight as we upgraded early September the entire sector.
Okay, all right. Hi, Pramod. Good morning. Good to see you with Nigel on this side. Let's focus on the two-wheeler pack first. We were just discussing about Royal Enfield. My colleague Parikshit had gone down to Goa and had a chat with the CEO, a rare interview. Do catch it during the course of the day. But from the two-wheeler pack, I believe you're more comfortable with Hero MotoCorp and Bajaj Auto. Tell us about them and rationale behind that.
So within the two-wheeler space, the way we are looking at is the mass segment players will be benefited better. One. Second, they will pull through the execution on volumes as the consumer comes through. Even if you look at the festivals, the festival growth has been pretty decent without spending much on the incentives. So that's a positive for the sector. Within the two-wheelers, the way we are positioning ourselves is considering the price gap increase for EV versus ICE. The incumbent ICE players are better placed on two fronts. One, to drive the short-term growth in ICE, and also they will have a more sufficient time and money to put through for EV transition, as we are seeing even the late entrants like Hero building onto it without blinking an eye on profitability. So that is the reason why we like Hero as a top pick within two-wheelers, followed by Bajaj. We have a hold on Eicher and sell on TVS.
Sell on TVS. Got it. And from the four-wheeler pack, you believe that Mahindra & Mahindra, which has been one of those most beautiful stocks, right? I mean, big returns. I recall they made that investment in RBL Bank. The stock was 1,500 approximately. It was down 6-7% odd. They've undone that measure and they've gone from strength to strength, whether it is with regard to the tractor segment gaining market share or focusing on the premiumization theme as well. Tell us about your preference in the four-wheeler pack.
So within four-wheelers, the start post of GST has been a little slow because of some concerns even on the cess front. Having said that, the first-time buyers we feel will come back over the next 2 years period. Historically, if you look at when interventions happened, the four-wheelers have given a superior CAGR, upwards of double digit versus two-wheelers. So we feel that trend will repeat, and hence a four-wheeler preference over two-wheeler will continue. Within the four-wheeler space, we again feel the first-time buyer will be in the small cars or compact SUVs. That's where our preference will be for the companies which already have it or will be taking action there. Mahindra action there is in 2027 versus Maruti, which is strengthening its portfolio in the current situation. So we prefer Maruti over Hyundai. We prefer Mahindra over Tata Motors in the four-wheeler space.
Pramod, on the auto comp side, what are the ideas, top ideas?
So within the comps, we have a limited coverage. Within tire space, we feel that the reversal to mean on profit margins are going to be sooner than expected because the price cuts have been steep and consumers may not be so much sensitive on the replacement market. We have already seen that playing out in the early part of September, October. We expect that trend to continue. Our preference there is we cover Apollo and Balkrishna. Our preference there is Apollo over Balkrishna, domestic versus international. We like Endurance, which has taken a beating post the second quarter results, but clearly 2-3 drivers which clearly look out for them is content per vehicle is increasing. One, second, they're getting into four-wheelers. They have got the magic on M&A coming through in 2 acquisitions which they have done in last 2 years. So we clearly see both organic and inorganic growth playing out for Endurance. The third one which we like is Samil, where clearly the balance sheet is pretty decent to make a benefit of any international turmoil as we go through. So those are the preferred picks in the comp space.
Okay, all right, Pramod. Thank you very much for those thoughts and the views on some of the stocks that you like within the pack. 9:10, so let's go back and see how the session has settled. Actually, it settled quite nicely, 54 points up. And the Nifty is exactly around that zone that we were discussing with both Sudarshan and Mitesh, 26,100, which has been quite a resistance in the past. Well, can that change today? We'll find out. Gentlemen, back to you for your final stock advice, stock calls. Sudarshan, which stock will it be?
It will be Tata Consumers. Buy Tata Consumers with a stop under 1160.
Okay, and Mitesh, your stock?
I'll go with the buy and Siemens with a stop at 31.44 for targets of 32.35.
Okay, all right. By the way, Eternal, as we're starting off, is about 2% lower. Swiggy is about 1.5% lower. So this is how the platform players are reacting to the new labor codes that have been ushered in. So keeping them on our radar. But for the time being, let's look at IT, because if you recall, CLSA had last week told us about their optimistic call on the sector. Well, there's one more call coming through, and it's a contrarian positive call on IT. This one's from Motilal Oswal. Rima is here with more. Rima, so what's their rationale? Why have they turned positive on IT?
Thanks so much for that. As you rightly pointed out, Motilal Oswal has upgraded Indian technology to a mild overweight. Now, there are 3 key reasons. One is, you can imagine the underperformance in Indian IT, not just over the last 1 year, where the Nifty IT index is down 12%, but even in the last 3 years, the Nifty IT index CAGR is just 3%, underperforming the index of broader markets, which have gone up 13 to 16% CAGR. Secondly, on the global front, they're saying that global AI hyperscalers are now experiencing diminishing marginal utility from infrastructure build-out, which basically means now the focus is turning away and it's shifting from infrastructure development to application and maintenance, which is where the Indian IT companies come in. And thirdly, they've done an analysis and they're saying that the IT company's profit share in the Nifty has remained steady at 15% over the last 4 years. But the weightage has dropped to a decadal low of 10%. And they also, they go on to believe fundamentally that generative AI inflection point is a couple of, quarters away, but it will happen. So on the whole, all these factors makes Motilal Oswal upgrade IT, the tech index, from a underweight to a mildly overweight. And Infosys has now come into their model portfolio. They believe Infosys will be the big beneficiary of the enterprise-wide AI spend, and valuations at 21.7 times forward multiple are fairly attractive.
All right, Arima, thank you very much for that. So that is IT services as a space for you. By the way, I think last week the IT index was up 1.6%. And it's basically been a very, very volatile last few weeks. Big up, then a big correction. I think the week before last was bad, and then last week came up. Let's see what happens here. Platform companies, right? We want to just address those with regards to the labor laws and what they mean for the profitability here. Mangalam is with us. Mangalam, take it away.
Well, the pre-open is something to go by. There has been some disappointment out here on these stocks, but remember, from a long-term standpoint, it is a positive when it comes to labor laws, etc. So the government has announced new labor codes effective from 21st November. Gig and platform workers are now officially recognized under Social Security for the first time. And the platforms will now have to contribute 1 to 2% of their annual turnover, capped at 5% for gig workers for Social Security. The benefits would be rolled out via state welfare and government schemes. Analysts say this could be an impact of anywhere between 2% of the sales, which could mean about 150 to 200 crore for both Eternal as well as Swiggy. They already provide health insurance to their riders. This could also mean an incremental pass on to consumers of rupees 1 to 2 or at best about 3 rupees per order. The company, on their part, they welcome the government proposals on gig worker safety. They are awaiting final notification before assessing materiality. But short point, about 150 to 200 crore is the incremental spend that these companies will have to make, which over the long term would be positive for gig workers.
All right, Mangalam, thanks very much for that. So bring certainty, maybe a little bit of short-term impact. We've got market open coming up on your screens. It's up about 0.2% in the Nifty, 0.2 on the Nifty Bank, similar amounts on the small cap index, and I guess on the mid cap index as well. We'll see if you're able to build on some of this, but it's 30 points basically, around 26,100 once again on the index, 58,990 or so on the Nifty Bank, 59,000 now on the Nifty Bank. Mid caps are flat, small cap index is absolutely flat as well. Nifty 50 heat map gives you a quick sense of where we're likely to start, and then we'll pick it up from there. It is 25 up and 25 down as far as the screen goes. Infi, Indigo, Wipro, etc. on one end, Eternal, Mahindra, and Tata Motors passenger vehicle on the other side. Surabhi.
Yeah, absolutely. It's IT all the way, and the IT index is the best performer. I mean, so far this month, it's put on about 4%, and now you have that Motilal Oswal call coming in. They are quite optimistic on basic large IT services. So Infosys, Wipro, HCL Tech, Tech Mahindra, TCS, all of those stocks up there. Infosys is leading the charge with a gain of nearly 2%. Interglobe Aviation is the other one that's flying high this morning, 1.25% up. L&T is chipping in a little bit. There's some support coming in from ICICI Bank, a little bit of green on Axis Bank as well. And then there is Lever, which is contributing about 0.25% at this point in time. Hindalco, which had obviously a rough last week thanks to another fire at Novelis. This morning it's seeing some green, 0.5% up. Now on the downside, Eternal is down about 1%. Actually, let's watch out for its peer Swiggy. It was down about 1.5% in the pre-open session. Still is. So these two stocks are down between 1 to 2%. M&M, BEL, and Tata Motors are some of the other names from the Nifty, which are cooling off this morning. A lot of the auto stocks had a great last week, so there's some profit taking today. Mid-cap index, by the way, has already slipped into the negative territory. So that's something to watch. Nigel?
Well, that's right. A few stocks actually that deserve special mention. I think MV Photovoltaic, that's a stock that listed last week. That's down closer on 4% or thereabouts. Hindustan Aeronautics, HAL, there was a big difference in pre-open on the BSE and the NSE. However, that has corrected itself, I think so. So now that arbitrage between the BSE as well as the NSE, both the rates are more or less similar at around 4,440. In pre-open, there was a large difference between the two out there. HG Infra, there's some positive news flow that's come in there, explains why that stock is bursting away. It's up closer on 4%. You have Karnataka Bank, that's actually an outperformer from the banking stocks. It's up 4.5%, good move out there. And Grow, Very, very volatile stock, for the last few trading sessions post its listing. Currently, that stock is up close to around 2.5%. So that's one of the big movers today on decent volumes. You have Physicswala, the other one that's been fairly volatile, listed at a 40% premium, then corrected to 120 rupees. It's down 2% and volumes quite large as well. So net, markets, the Nifty that is, holding well in the green with a gain. But as we mentioned earlier, Nifty is moving to all-time highs. Portfolios are not feeling like that because the mid-cap and the small-cap indices have actually underperformed.
Absolutely. So you got what Karnataka Bank, as Nigel mentioned, which has come up. Actually, Friday's session was very, very large for Karnataka Bank. It basically went from 175 to Friday's close of almost 190. And it's up to almost 200 now. So, 2 days now, that's pretty, almost like 15% kind of gains coming in here. NBCC is the other one, I think, which is trying to make a comeback. NetWeb is up about 1.5%. Shaily Engineering is coming up with volumes at this point. It's come off the highs. I mean, highs were about 2,800. But it's been a super performing stock, no doubt. I think Shyam Metallic, there's coverage on this one, so 4% on Shyam. M&M Finance, 2% higher at this point. There is Team Lease, I think we mentioned it, 9% on Team Lease, right? It's been kind of sideways for a long time now. I mean, I think if you just go back almost prices are the same levels where the stock's been about, 7-8 years ago on Team Lease. Action Construction Equipment is up about 3.5%, and so it goes.
Just two more stocks, Prashant. I don't know if you guys mentioned these or not. HG Infra and Kalpatru.
Yeah, I mentioned.
Yeah, that combination that's won that Thane Metro viaduct. These two, still up 5 to 6%. So big high flyers there.
Yeah, absolutely. Well, let's welcome in Devina Mehra, who's with us, founder, chairperson, and managing director at First Global. Devina, good morning. Great to see you, as always, here on CNBC-TV18. Now, let me just start by asking you, Devina, the basic, let me start with the premise. Typically, you would not do well by doing what everybody else is doing. And that is the reason why, these calls for buy stuff which no one else is buying and sell a little early, and that's good if there's too much euphoria. I know it's a tough one, but my question is actually simple, although I'm prefacing it with all this. Which are the areas which are absolutely unloved, which you think will do well as we peer into 2026, and vice versa?
See, that's difficult to say because, you cannot be contrarian for the sake of it. That does not make sense. The only thing where we think our system help is that it signals it a bit early. So, for example, industrial machinery, capital goods, we got in October 21. Most people discovered it a good 2.5 years later. So that sometimes happens. But I wouldn't say that this, this current rebalance, one area which was at least unloved by us, where we have added is the energy or oil sector. So, that's been the kind of new thing which has come in, and I don't think we had any weightage there. So that is one thing which has changed this quarter. Most of the others are often not that dramatic changes. IT little went from large cap IT to mid cap IT. But other than that, some of the themes have run for a while for us, like pharma, healthcare, auto components. Of course, pharma did not perform that well in between. So I think that has begun to change. PSU banks is something we added through this year. So that is, again, by now a discovered theme, you can say. So broadly, that would be, or as I said, some themes have run from last year. FMCG has been built up over this year. Again, liked more and more by our systems as time went by.
Devina,
and I don't get into a very high risk sector just with the hope that it might outperform. Usually outperform. Yeah. There are enough stocks usually in a market that outperform. Of course, I heard what you said at the tail end that the in the index, the things look much better than they do in individual portfolios. So this has been an unusually narrow market. It has broadened a bit since August. August was, I think, one of up to August was like the up move was one of the narrowest I've seen, where only about 10-15% of the stocks outperformed. Probably even I think at one point it was even less than 10%. Whereas, I mean, just to give you a norm, I mean, the norm is about 40% outperforming. Even when it is 25% outperforming, we think, this is the market is narrow. And this time it's been very narrow. And even now, there are a whole, I haven't seen the last numbers, but if you look at stocks down 20% plus or 25% plus, that is still a very large percentage of the stocks.
Devina, hi, morning. Good to have you with us. So you're someone who's always been a strong advocate for diversification and global diversification as well. So just wondering, Amin, if there is any change in thought in terms of the global part of your portfolio, looking at everything that's happening in the US. I mean, it was almost US equities were unrivaled, unchallenged, but now there's this whole AI debate going on, bubble, not so much a bubble, etc. So have you made any changes there with respect to your US allocations?
Yeah, so as I always say that US is not the world. So this is what other thing which I keep telling people, that don't think you have globally diversified just because you have bought an NASDAQ or S&P. And of course, there the market has been extremely narrow. I mean, it has been just the tech. In fact, global equities also, if you see the entire move this year, something like 75% has been tech. In US, it has been just that one handful of stocks, the Magnificent Seven. But besides that, also, I was looking at the categories of stocks that have done the best in NASDAQ, and the companies with no revenues and profits have done the best. So either with no revenues or no profits, both those filters, those stocks have done extremely well. So, but that's a sign of danger. And even before this, if you'd asked me last year also, I would have said that the US has outperformed for well over a decade. And at some point, that outperformance has to end. And I think President Trump, all the things that he did also is kind of hastening the end of that US supremacy in many areas. And also, you talked about the AI bubble. Yes, I mean, to me, it is always, I talk about this, that when a new technology comes in, which particular thing will succeed, how long will it take to succeed, which company will succeed, and even if the company succeed, will you make return on capital? That is the real question in all this spending on AI. I mean, just to remain in the race, you have to keep spending. You have to keep spending on, of course, the data centers, which is real estate, fast depreciating assets, and also a lot of power. But even to get people, I mean, I've heard of 100 million salaries and 500 million salaries. So you have to run just to keep in place. And you will, I'm not sure you will get anything like the return on capital. People might use it, but when schools and colleges were shut, many of these AI models, their usage dropped by 60-70%. So it's been used by students for assignments, whether they were to pay. And still, I mean, you are a long way from the enterprise segment trusting the AI systems, because there is so much of hallucination, and that famous Deloitte thing in Australia, when so much of the report generated by AI they found it was made up, right from court judgments. It had made up a whole lot of things. So there are many question marks, and basically it ultimately, if you look at in financial terms, whether the return on capital will come on all the money that's going in. So there's definitely something which doesn't make financial sense, and eventually if something doesn't make financial sense, the market wake up to it. Then there's also a lot of debt being raised by AI companies, which is like, again, one other red flag.
All right. Hi, Devina. Good morning. Good to hear your thoughts as always. Let's talk about what you said you recently added. Oil and energy sector, right? Could we drill down a little bit into this? What have you added out there?
Basically, oil marketing companies. So that's mainly where it is, because, I mean, the crude oil prices are not that high that you would go to that side, the other side.
All right. So you like the valuations. Your crude oil prices remain suppressed, and I think refiners they have a smaller portion of that in their mix. But
This was a sector where we practically had no weight. So I mean, it's not that we have gone hugely overweight or anything, but that's where we have added.
There was this, I keep, by the way, another way to measure, but Devina is talking about all marketing companies here, it just struck me, this one stat about, and Hormuz did that link, if you remember last week, how big is NVIDIA? NVIDIA is larger than the entire US energy sector combined.
Wow.
Right? So that's the other one. And to Devina's point, and Devina, looks like it's Sanjeev Prasad of Kotak put out that note, and I thought that note really, the title of that note really, you don't need to read the note. I mean, the title said it all. It said low ceiling, high floor. That's it. That's his description for the market here in India. Low ceiling, high floor. So you're basically stuck, very, very narrow. And I think what you're saying somewhat echoes that broadly.
No, I mean, I see. I mean, the markets will always frustrate you. They will never do what you wanted to do and when you wanted to do. But always remember that sentiment is a contra-indicator. When there's excess buoyancy, as there was for the first 3 quarters of 2024, when everybody thought like 30% compounding was there for the taking, is when you should be cautious, because studies around the world show that when there's that buoyancy, the next period returns are below normal, as what happened in the last whole summer. And when you are questioning yourself, what's the point of being invested in India? And, should I stop my SIPs? That's when the next period returns are above normal. I mean, that's the data around the world, from Brazil, Portugal, India, US, wherever, whichever market you track it is the same. So that is the whole point, that you're keeping control of your emotions and remaining invested when those questions come is really the superpower.
Okay, all right. Devina, we'll leave it there. Thank you very much for joining us. Good speaking with you here on CNBC-TV18. Appreciate it very much, as always. I think 45 points on the Nifty, 26,100 is where we are at. We're absolutely flat right now. So neither here nor there as things stand. Okay, I think UBS is initiated on Shelly Engineering.
Yeah, that's
and we should have someone sort of come up and talk about this initiation as well. So maybe 2 initiations, right? I think both from UBS. There's Sham Metallic and the other one is Shelly. And we'll try and have this coming up in just a bit from now. The number one volume-led gainer is Infosys with a 2.5% gain. So that's the other initiation, not initiation, but upgrade. Moti says that no, not Moti. I get...
it is, yeah.
It is.
Motilal has upgraded the entire sector. That's what Rima was explaining. Again, their deeper thought process or rationale is very similar to CLSA.
Yeah.
Exactly what Vikash Jain told us, that as AI moves from the build-out stage to more the application stage, that is when Indian service providers, which know how to use all these new technologies very, very well, that's where they'll start showing up their edge. And that's also the thought process that Moti shares, which is why they've upgraded the sector. So it's not just a tactical upgrade from a cash balance perspective or the fact that the sector has underperformed this year, but it's also sort of thematic in that sense, that eventually these companies will prevail.
And the point they make on weightage, right? The weightage of tech stocks in the Nifty has fallen from 19% in December 2021 to around 10%. But the profit contribution is constant at around 15%. So that's the other point they're making in that note as well. Okay, all right. I think for today, there's going to be an MSCI rejig that's going to be taking place. So we'll watch out for those flows, because I think roughly it could be around $200 million. Is looking at a Nuvama note. Vivek joins us to help us out with a quick refresh on that. It's scheduled to take place today. Vivek, go ahead.
Well, that's right. Especially in the last hour of the session, all the names that we mentioned will see heightened volume activity. Important to note that these names have been flagged off earlier as well. There has been quite a lot of price move going into this particular rejig as well. Now, remember, given the fact that India has underperformed most of the emerging market indices, India, which started off the year with a roughly 20% weightage in the MSCI EM, is now just around 15.6 to 16% weightage. So there has been a significant underperformance leading to a drop as far as the weightage of India in the MSCI India EM is concerned. Now, in terms of the individual stocks to keep an eye out for, 4 additions. Fortis Healthcare, Paytm or 197, GE Vernova T&D, and Siemens Energy are the stocks that will enter the index today. Fortis expects to see inflows of close to $450 million, Paytm too in the same range. On the other hand, 2 stocks get deleted from the index, Container Corporation of India as well as Tata Elxsi. Both of them will see outflows in excess of $170 million. In addition to this, the MSCI India Small Cap Index will see close to 30 deletions as well as 6 additions. So because of the underperformance, you're actually seeing a significant amount of deletions as far as the small cap index is concerned.
Okay, all right. So we're going to watch out for some of these index changes. Vivek, thanks for putting that on our radar. For the time being, we are turning the spotlight on KEI Industries. We have Mr. Anil Gupta, CMD of the company, joining in. Mr. Gupta, thanks for being with us. So, we really want to understand what the second half of the year is looking like for your sector and, of course, for KEI in particular, because up until now, it's been fairly steady demand for wires and cables. So you tell us, what do you see ahead and how do you expect the second half to shape up?
Yeah, good morning. Thanks for inviting me. Second half of this year, this financial year is going as projected. And we expect a overall growth of around 18 to 19% in the full year period. And I think the demand is pretty strong, and I see no challenge in achieving the growth trajectory in the second half as well.
All right. All right. Hi, Mr. Gupta. Good morning and good to see you, Ben. You're confident on growth. I believe at a recent conference, you said that, in fact, demand is very, very strong and getting to these numbers will be no problem. I think the following year, you're guiding for close to 20% growth as well, if I remember correctly.
From in the beginning of the year, I mentioned a growth of 17 to 18%. And I think we have delivered more than that, much more than that in H1. Okay. And actually, I'm always conservative in my projections. So I don't want to over-project. We should be able to achieve whatever I have said.
Okay, all right. Give us a sense in terms of exports. On a low base, did see a good uptake. So if you could tell us how are things looking out there? And I believe the exports to the United States has been weak, obviously because of tariffs. But in Europe, you're seeing some kind of traction out there. So fill us in on that front. And also, if you could help us out with the margin difference between domestic and exports.
The export remains pretty strong in all our export markets, Europe and Middle East, as well as Australia. And so far as US is concerned, yes, our projection was pretty strong this year, but it has dropped because of the tariffs. But we are able to make up the shortfall from other markets. And regarding margins, I think there is a margin difference of 1 to 1.5% in export markets, better than domestic market. And as we are building up capacities, we will be able to grow our export as well as margins with the economies of scale.
All right. And I think you're guiding that exports will be in the high teens, right? As a percentage of the mix, 18 to 19% of the total mix is what you're looking at. And yes, on a year-to-year basis, you're expecting margins to improve as well for the company on the whole by around 75 to around 100 basis points, for the coming year, FY27 as well, in comparison to 26?
Yes.
Okay,
definitely. Yeah.
Mr. Gupta, just one quick, I want to just take away, continue on that margin point. You don't think, and we've discussed this in the past as well, right? And I think you were the one who told us once, when copper prices go up and there's an unprecedented runaway move, if there is an unprecedented runaway move, what it does is, I mean, it's of course passed through and there's hedging, etc. But it kind of impacts volume of work, etc. I mean, and I think we had KEC recently who kind of sort of alluded to that as well. Anything you can tell us on this, sir?
See, the pause comes only for a short period, because the contractors who might have taken contracts on firm prices, they think that prices will go down and they try to wait for placement of new orders. But eventually, they can't wait for more than a month or two. So eventually, the demand comes back. So, so far as margins in rising market is concerned, my observation is in several years that it may impact 0.5% plus or minus depending on the market situations or market sentiments.
Okay. So this guidance which you've given out, which is for improvement, that takes into account all of this?
Yes.
The copper price rally, etc.
Yes, we always take into account, and we have delivered even a revenue, volume growth also of 15% in the first half. So it is not just the turnover by way of prices, but it is, we always, observe the volumes, not just the value.
Mr. Gupta, since we're talking margins, one obviously added component of that conversation has to be what the competition is doing. And the earlier part of this year was spent really discussing that. The deep-pocketed, large business conglomerates that are getting into your space. Now, I don't know where things stand. I'm not quite sure if that product has already hit the market, the Adanis, the Birlas, and if it has started showing up in any way. Can you just update us what's happening with respect to competition from these other large players?
Yeah, so far, no one has entered the market, neither Ultratech or Adani. And I had said in my earlier interviews also that even if they enter, I'm sure that our growth will not be impacted. We are working our growth based on larger territories and geographies and larger markets and segments and the product lines, instead of just focusing on traditional product lines of the construction and building industry.
No, absolutely. What I was just asking, you have your ear to the ground, so what are your channel checks indicating? By when do I think they announced their plans in March of 25. Now we're at the end of 25. So what are the channels saying? By when will they be a presence? And then, of course, we'll see how competition plays up. And you all have been, old-time players, old-time hands. So what timelines are we looking at when this competition actually becomes real in the market?
In my opinion, it takes minimum 2 years to build up a plant and launch the product. So that much of time anyone is going to take. That is for wires. And for cables, if it is medium voltage or high voltage cables, it is more. So I think next year also, we don't see much impact due to them.
Oh, okay. On a side note, just a different tangent, I'm just asking this. The fact that there is a huge data center build-out that started in India, and we know that power is a huge part of it, and a lot of the power equipment suppliers, transmission companies, they're seen as a bit of a play on this data center build-out. Can you tell us if this has any direct implications for you?
Of course, every demand coming from any sector has a cascading effect on the demand. And data centers, they require power source or energy source from 3 different sides. So the incoming power demand increases, incoming demand for cable increases because to bring the incoming energy. And also within the data centers, there is a substantial requirement of wires and cables to interconnect their panels or systems. So definitely it is seeing in the demand, but this is just one of the sector which we cater.
All right. Mr. Gupta, I don't know whether you have a number offhand, but I believe one of your competitors, that is Polycab, they said for 1 megawatt of to set up of data center capacity, the total cables and wires demand will be around 3.5 crore approximately. Do you have any rough numbers in terms of a matrix out there? And that's why they believe that this data center push with the 6 gigawatt of data center addition, it'll be a big tailwind for the industry. Do you have a rough matrix out there?
I agree with it, but I don't have the actual numbers that how much wires and cables will be consumed with 1 megawatt.
Got it.
But I agree with these numbers.
And how much do data centers right now contribute to your revenue? I'm just trying to get a sense, your exposure to data centers and how you see that growing.
Actually, we have not quantified the numbers.
Okay.
Which are going to data centers.
All right. Final question, sir, before we let you go then. tell us about this GST cuts that we have seen. You know, it was supposed to propel some kind of a demand for housing wires. Have you seen signs on ground out there? If you could help us out with that. What would the ideal mix for you be between cables as well as wires? If you could tell us there. And expansion is on stream, right? Sanand, you know, it was supposed to be in September, November. I believe next week you're going to cut the ribbon out there. Is that correct?
Yes, we are going to commence the production in next week, first week of December. And so far as this wire segment due to GST is concerned, actually, I don't think that we are able to quantify it so far, because October month was the festival month and November is just going on. So we will definitely quantify. I will let you know in the next conversation that what is the impact of GST cut on the wire sale.
But demand is strong enough. That's all you'll have to say with regard to cables as well as wires.
Demand is strong enough, and demand is basically related to the construction activities. I mean, I don't think that just because of some GST cut, somebody is going to buy the wires for just keeping it.
Yeah, but it gets cheaper, then you get more adventurous, right? We got that point with regard to demand being strong. And you want to give us the rough breakup about how will you see the wires and cables, mix progressing from here on?
Our cables mix will remain 75% and wires and flexible will be around 25%. Yes.
Always a pleasure talking to you, Mr. Gupta. Thanks a lot for joining in. 18% to 20% growth on the top line. Margins will continue to improve. Strong traction both on ground as well as in the export market. And Sanand facility set to cut the ribbon in the coming week itself. Well, time to slip into a short break. On the other side, we'll have the management of Chola Finance who will be joining to discuss the impact of the renewable certificate rate revision and also their business outlook. Stay with us.
Welcome back. We have the management of Chola Finance now with us as promised. Remember, rates for certifying, vehicles, both personal vehicles and commercial vehicles, but of course, the impact is much more for commercial vehicles. The rate for certifying these vehicles are fit for use and can remain on road has gone up dramatically, especially for commercial vehicles older than 20 years. So let's try and understand what the implications for the vehicle finance business is from the CFO of Cholamandalam Investment Finance, Arun Selvan. Mr. Selvan, good morning. Great to have you with us here. Thank you very much for joining us.
Good morning. Yeah.
These are pretty dramatic increases, sir, on the CV side. Can you run us through what kind of what can we see? What's the right way to think about it before you try and quantify the impact?
See, this is like an essential part of what we need to do when a new used vehicle needs to be sold to a new buyer. So they will incur this cost. To some extent, this will have to be funded by them, and partly it can be funded by us. So we need to understand how this funding impact will happen. But it is not a large sum when you compare the total vehicle cost that needs to be funded out. So I think this is part of the cost that needs to be borne, and it will be borne, and it will move on. On a cycle of 3 years, this number is, even if it is funded, it gets amortized or it gets split into EMI. So it will not be a large differentiator in my view.
Yeah. So you think, at the margin incrementally. Do you have any numbers, sir? What are the number of vehicles impacted because of this? Your team would have those numbers, right? And
it all depends on the age of the vehicle also. So that would also mean for us, as you know, we more handle vehicles which are the first time resold. We don't do more than 10 years or 7 years. So around maturity it is 10 years. So the cost on that is comparatively still lesser. So accordingly, our customer profile may not be that much impacted, while it could be slightly higher on further or more older vehicles. So.
You think at the margin, Mr. Selvan, this kind of pushes, sort of raises demand for loans, as you began by saying, possible? And also, I mean, if some vehicles are at the margin and cost goes up, I mean, it's basically a decision between whether to continue, pay this, or but you said the cost of the new vehicle is much higher. So is it really a trade-off in that sense? Maybe for a few.
If you look at it, what is happening is when the BS4 to BS6 happened, there was a large push into used vehicles because the cost difference between a BS4 and BS6 was wide. And people who would normally even go for a new vehicle opted for a first time changeover of a BS4 vehicle. That is, the second buyer. But this progressively is now reduced because the quantum of BS4 vehicles, which are like up to 7 years old, has come down drastically over the years as this BS4 has been completely stopped now. Add to that, the cost of the BS6 vehicles have also come down because of the GST change. Both put together, I think there will be a shift back to people buying new vehicles who used to buy new vehicles earlier and then shifted to used vehicles when the price differential between the BS4 and BS6 become wider. Now this difference is changing, and now what will progressively happen is only BS6 vehicles will come into the used market, at least for the first changeover, and that way the differential is narrowed and people would more opt for a newer vehicle. We have to experience this. This is my assumption or my hypothesis about how the market will pan out. We need to see how this pans out as we move into the post-GST.
So Mr. Selvan, morning, sir. So if you put everything together, in the second quarter, your vehicle finance book grew almost 15-16%. Disbursements in vehicle finance were also healthy at around 10%. So all things put together, including what you just described, in terms of the emission norms having changed, the GST cuts having set in, second half, what is the kind of growth you're seeing in your vehicle financing book, and which part, what will drive it? Is it going to be light commercial vehicles? I mean, what part of the book looks most robust right now from a demand perspective?
In Q2, the large push happened primarily because of two-wheelers and then the passenger car, which where people wanted to take advantage of the reduction in GSTs, and then also the festival season started. You will see this continuing into the Q3, and you will also see on the commercial vehicle, progressively heavy commercial vehicle coming into play. The other factor, especially with regard to Chola, is during periods when cost of funds goes up, we slow down on the heavy commercial vehicle because the yields are low in this particular segment, and we can't really have adequate margins when the cost of fund is high. But now the trend is cost of funds being low. We will now slowly move back into the heavy commercial vehicle segment also. So we see H2 having a reasonably good growth on vehicle finance, and they should end the year with a decent growth around the 18 to 20% AUM.
All right. Hi, sir. Good morning. Good to see you. When I recall, you had cut down on the growth guidance from, I think, closer to the mid-20s to 20 to 22%. Is that gettable, or are you scaling down a little bit? Because some on the street believe actually it will be in high teens. So if you could help us out with clarity on the growth number for this year itself, which was already scaled back a little bit.
We still hold the 20 to 22% growth levels. We should be there by the end of the year for the full year, year on year.
Okay, wanted clarity on that front. Let's focus on the other two aspects then. Credit cost, if you could give us the comfortable level that you're looking at on that front. And also NIMS, you were guiding that things start improving from here on, as the yields improve, as, cost of borrowing as well comes down. Stick to that 10 to 15 basis point improvement. What would be the rough range? Credit cost and NIMS. Please go ahead, sir.
Credit cost will come down a bit in Q3, Q4. This is always the trend in any year if you look at it pre-COVID, and we will experience this. We'll see this coming down. Our guess is at a company level, we will close the year with around 1.5 to 1.6% on the credit cost. This is also primarily the impact on account of the step back from the fintech business, where the credit cost will see some larger proportions as we move into the final legs of running down that AUM of that book, which will mostly run down by end of Q4. So we should close the year by around 1.5, 1.6 at the company level on the credit cost. But the NIMS will improve. NIMS are improved in Q2. You'll see similar levels with further, 5 to 10 basis points improvements in the Q3, Q4 numbers. So overall, you will see around 20 to 25% movement in the NIMS as compared to last year.
Okay, all right. Let's focus on the other parts of the business, the housing finance as well as LAP traction. How has that been? If you could give us some color there, sir.
Both LAP had been growing at a decent pace, around 30% plus on the AUM, and it will see the similar growth. It is not impacted either positively or negatively by the cost of funds because it's a floating rate book, so it will continue to deliver the ROAs it has been giving. So that's a good business. We have sort of stabilized it, and it is running at a good, decent pace and adding to the bottom line in a decent way. On the home loans, there has been a little bit of a slowdown on the disbursements, primarily because of a certain SRO-related, issues with regard to Qatar, etc., in certain pockets of certain states. But this is getting addressed, and I think progressively you'll see in the second half disbursement also growing. While disbursement slowdown, AUM was growing still at around 20% plus, and you'll see that the full year we will still close the home loan book at above 20% mark.
Okay, what about the competitive intensity? PSUs, they are being a little aggressive in the home loan space. Have you seen that?
We have never been in the same market as PSUs. PSUs more focus on salary. We are in the self-employed non-professionals. Our competition is more with other NBFCs and housing finance companies like. So we don't see being our competition there.
Good to get clarity, sir, on that front. And finally, ROAs should be closer to around 2.4% odd. I think it was around 2.2% the last number that I have recorded.
Yeah, I would keep it between 2.2 to 2.4. Let's keep it conservatively because you always take the higher side numbers.
No, sir. I take what you say. I'm happy to ask you the questions. What you take, I hold you to that number. So you're saying 2.2 to 2.4. You want to keep it in that range.
Yes.
Pleasure talking to you, sir. Thanks a lot for joining in. Wishing you all the best. And, we catch up either later this year or early 2026. Thanks for joining in. Well, that said, let's get a technical check on the markets. The markets, dipped into the red, and now we have moved back into the green, up close on 20 points. The Nifty Bank is doing some of the heavy lifting today. It's up 0.2%. But yet again, the breadth of the market is in favor of the number of stocks declining. So you have only 1,000 stocks advancing, 1,500 stocks declining. Siddharth Rai joins us on the show. Hi, Sid. Morning. Good to see you, Ben. What's the call today? Buy the Nifty, or would you stay, at the sidelines and then look to buy at lower levels? So call on the Nifty first, and then fill us in with your individual trading calls.
Hi, Nigel. Good morning, and thank you for having me on the show, first of all. See, Nigel, if we talk about Nifty, the undertone in the index still looks bullish, first of all. But having said that, Nigel, I do think that there was a change in the Nifty structure after the second half on Friday. Now, 26,200 is a strong resistance for the index. And also, when I look at the other spaces other than IT, Nigel, I don't think there's any signal of a good momentum from any other major space. So we have to wait for a while. It is a good idea to wait for a while right now. And only once Nifty manages to go back above 26,200, then only we should be taking fresh positions in Nifty, because only then we'll be seeing a fresh momentum move towards the all-time highs and probably even beyond them towards 26,350 and 26,400 levels. But for now, it is much better to wait and just, like you said, to sit on the sidelines in the index.
Okay, and Siddharth, morning. What about your stocks? What are you working with today?
Yeah, sure. So we see two stocks. Both of these we have to buy. The first one is definitely from the IT space itself. The name of the stock is Tech Mahindra. See, it is one of the leading IT counters right now if you look at momentums. So a lot of up move has already come, but there is still a big room for an up move towards 1560, 1570, those levels. So Tech Mahindra can be bought right now. The spot is trading around 1510-ish. Our stop loss will be at 1495. And the targets being, just like I said, 1560 and the second target 1575. The second stock is Tata Technologies. See, this stock has a base around 660, 665, these levels, and it's a very strong support for this counter. Just around those levels, we have seen an open low being made today. The stock opened around the levels from where it started running. So the structure looks very good for now. Tata Technologies can also be bought. Right now, the spot is trading around 678, 679. We can keep the stop loss at 669 and the targets being the first target 699 and the second target 710.
Got that. Thanks very much for that, Siddharth. Appreciate it. We'll take a quick commercial break here. We'll come back in just a bit from now. It's a quiet kind of day so far. 25 odd points. And let's see if things pick up, right? Otherwise, market breadth, 1,800 stocks are lower and about 1,050 stocks are higher. So that's not just the Nifty, but a look at the broader sort of picture in terms of mid caps, small caps, everything. Manisha is with us on the other side. Commodities in focus.
Welcome back. 26,100. That's the story on the equity market side. Let's figure out what's happening in the commodity market space. Manisha is here with the latest. Manisha, what's the big headline or the big commodity you're tracking?
Well, there is profit taking across sectors, and zinc is no different, and that's what I'm focusing on right now. But we did see 11-month highs in the beginning of November itself, when the zinc prices went all the way to $3,100 a ton. It's holding around that 3,000 level at this point in time. But the overall pullback that you have seen in regional equities and various other base metals as well seems to be weighing onto the zinc prices also. And then there are concerns of that exaggerated AI investment pledges that seems to be bothering many of these green metals there. It also has to do with the higher delivery commitments that are coming in from China. That seems to be weighing onto base metal prices right now, including zinc as well. Take a look at what zinc really has done in 2025 till time. So the high that we've seen in this year has been $3,150 a ton, and the low has been to the tune of $2,550. We seem to be holding at around 3,000 levels at this point in time. So on the higher side of the range is where zinc prices seem to be trading at this point in time. So that range really is $2,550 to $3,150. As I said, this is the range that we've seen. A $500 of a range is what zinc has done in the year 2025. Now let's take a look at the LME zinc stocks, and there has been a very strong decline onto that one. The year started with 230,000 tons. We're standing at 34,000 tons right now. This is 1 day of global consumption where we are. But the reason the zinc prices are not running up is because while the LME inventories are trading at a 2-year lows, but when you look at the Chinese stocks, well, we have seen an increase coming in for that. In the month of January, the China stocks were at 100,000. They stand at 162,000. So when you look at China and ex-China, these are two different worlds when it comes to zinc, and is the reason you're looking at a disparity and the reason that the zinc prices have not run up really. There also is a report from SMM which says that the refined zinc is at a surplus in China to the tune of 290,000 tons. But when you look at ex-China, there's a 90,000 tons of a deficit there. So it clearly is two worlds that we're talking about. Interesting data also coming in from the Singapore Customs, which says that a lot of zinc has been exported into Asia. A lot of countries like Indonesia, India, Vietnam, Malaysia, Middle East have bought in a lot of zinc. These are the countries which also are looking at infrastructure. Galvanized demand is quite higher here. And there is also a re-export happening from these countries. So there's a lot of zinc coming in for these countries. Interestingly, when you look at the Indian zinc demand, well, we're looking at 1.1 million tons of per annum demand in 2024, then expectation that this could easily double up to 2 million tons by 2030. Also interestingly, while India's per capita consumption of zinc is half a kgs, global average stands at 4 to 5 kgs, and developed countries consume anywhere between 6 to 7 kgs. So expectation being that Asia could be a big demand driver when it comes to zinc, especially coming in from India.
All right. Well, Manisha, thank you very much for that. Well, I think we've got the new Chief Justice of India taking oath. The visuals are coming in of the swearing-in ceremony. Mr. Suryakant, Justice Suryakant, who's taking oath as, at the Rashtrapati Bhavan as the Chief Justice of India, the next Chief Justice of India. And this is, of course, after B.R. Gavai. Justice B.R. Gavai is retired. So that is what's happening. You can see the Prime Minister, Mr. Modi, some other cabinet ministers. I think there's a fair bit of family of Justice Suryakant also present at the swearing-in ceremony. So visuals coming in from the Rashtrapati Bhavan. Okay, well, let's come back to the stocks, right, and address two names, HG Infra and Kalpataru Projects, and shine the spotlight on these once again. Vivek, take it away.
Well, that's right. HG Infra doing quite well in the session on the back of being declared as the lowest bidder in this particular project. Remember, this particular project is for Maharashtra Metro project. It's for the Thane Integral Metro Rail project. Now, HG Infra has a 40% share in this particular JV, and Kalpataru Projects has close to 60% JV. It's an EPC project. The total bid or the lowest bid has come in at 1,415 crore rupees. Time period of execution is close to 3 years. Now, what is it that both of these companies will be doing? Design and construction of the elevated metro diaduct. And when you're talking about HG Infra, the order book was in excess almost 14,000 crore rupees, and Kalpataru Projects, the order book was in excess of 64,000 crore. A more meaningful order as far as HG Infra is concerned, which is why you're seeing the pop-up as far as the stock price is concerned.
Okay, all right. Got that, Vivek. Thank you very much. Both of those stocks in focus. But they have cooled off significantly, obviously, from the highs of the morning. We'll take a break on that note. On the other side, our special segment is The Economy. Lata today discusses loan growth, margins and stress in the NBFC sector with Krishnan Sitaraman of CRISIL and Jairam Sridharan of Piramal Finance.